The broadcast is now starting. All attendees are in listen-only mode.
Okay. Good afternoon, everyone. Today is Thursday, December 13th. It's about 12:45 Chicago time. Normally, I kickstart this off at 1 o'clock, but I just thought, you know what? Markets are a little sloppy right now, and phones aren't buzzing, so I thought I would get this started early. Before I get started, I do have to go over the disclaimers. Again, I don't really like to throw them up there and then put them under the blanket. I'll take a few minutes to go over them because I do think they're important. So I'll go over the disclaimers, and then the next order of business is to go over the trade setup. This is the traditional CFRN trade setup that's been around from day one. So I'll go over the trade setup, and then what we'll do is we'll take those rules and we'll pop into the market at a live setting, and I'll make some observations. We'll go inside the DOM, we'll buy, we'll sell. I'll manage the trade from start to finish. I'm going to make some observations, and along the way, you guys can ask questions. Okay, so that's kind of the game plan this afternoon. If you are brand new, this is a great way to start. This is going to be a good syllabus for you for your trial period, because what I'm going to do is go over the trade setup that Michael does in the morning, but I'm going to do it in slow motion. I call it first gear. Okay, Michael's in the training room from 8:30 to 10:30. He's got a goal. He's trying to meet that goal, and sometimes he's moving fast. So he sees things that sometimes we don't, and he's being proactive, and he's getting in and out of the markets. So things are moving fast sometimes in there. I notice with a lot of the new guys, they don't tend to ask a lot of questions. So this is a good place for you to start. It's a good place for you to start asking questions. If anything, this will be a great eyes wide open approach toward what to expect in the training room in the morning. So at least by the end of the trial, when CFRN sends you an email with their offering, you have a grasp of it. Maybe, it'll give you a better idea whether you want to raise your hand and say, yes, sign me up or not. Okay? That's the goal. All right? For those guys that are CFRN members, welcome. You guys, you're more than welcome to hang out. This is a good time for you to get some more screen time, get to know the person out of the market you're trading. You're going to get to ask me questions. You'll see the markets through my eyes. I'll make those same observations that I'll offer to the new guys, to you guys. What happens is a lot of times guys are sending me screenshots. They might be struggling, or they might be asking me questions. What about this? What about this? What about that? And what I'll be able to do is take some of that feedback and broadcast it to you guys. All right. I see a lot of the common mistakes happening over and over and over again. Those are the things I'm going to hammer on this afternoon. Okay. So a lot of times I sound like a broken record, but it's those things that I see on occasion that really, those are the traps that people fall into. Okay. Now, I do have phones buzzing, so I'm going to put you on hold for a minute, and then I'm going to get back and start the program. Okay. All right, so I'm back. About 5 people called at one time. How about that, huh? The phone hasn't ring pretty much the whole day, and then, of course, when I start the webinar, they want to all call at once, which is fine. Anyways, so that was the game plan. I'm going to go over the trade setup. We're going to get into a live market, and we're going to put trades on, take them off, manage them. I'm going to make some observations, and hopefully in the end, your eyes are a little bit wider open, and along the way, please ask questions, okay? So here's the first part, which is the disclaimers. So if you've been around, I see a lot of common names in the audience. So if you've been around, this is a great time to go get coffee or some water. But the disclaimer really is meant for the guys that are brand new in our space. Okay, these are guys that have gotten the email and saying, "Hey, I've gotten this email, and these guys are saying this and that, and they're promising this and that." I get the emails all the time. But the idea is behind this is basically that our space, the futures, commodities, is a leveraged area. Okay, so anytime you put a trade on, your account is at risk. All right, because you can lose everything and some in your trading account if you're not watching over the account, especially if you're not using stop losses, if you just ignore what the heck you're doing. If you don't even have a trading plan, you can forget about it. Some of those things, just very simple things, common things, not paying attention to what's going on in the marketplace. If you're not doing those things, this disclaimer is going to hit you right smack dab in the face. Okay, I've been doing it for 25 years. That's why I don't like to gloss over the disclaimer. I like to talk about it for a few minutes. Again, the idea of the webinar is an eyes wide open approach. Okay, it starts with the disclaimer. Okay, so because this is a leveraged space, yes, you're always at risk, and it should be risk capital that you can afford to lose. All right. Now, with going down the CFRN path, all right, they do have a set of rules. Okay, they always use stop losses, right? As outlined here, every trade has an 8-tick stop. They use aggressive risk management. You're on a 4-tick range chart. What does that mean to you? That means you have to be in front of the markets. You have to be engaged in the markets. You need to be watching. And you'll be in front of a DOM. That's this tower here. Okay, this is where we buy and sell things. Okay, if we think the market is going to go up, we're going to left click in the green. We make money if it goes up. If we think we get a signal that the market's going to go down, we're going to left click in the red, and we make dough if the market goes south. Okay, that's how it's done. But the bottom line is, every trade does have a stop loss in, and we are using aggressive risk management, so we have to be in front of the markets. Okay, so what does that mean to you? Basically, what it means is it kind of waters down that disclaimer. It doesn't eliminate it, but it waters it down a little bit, because if you are doing all the right things, you're in front of the markets, you have a stop loss, you have a set of rules, that means you have a trading plan. And if something goofy happens in the world, a stop loss in place can get jumped, could get hopped over. Okay? But the good thing is, you're in front of the screens, you're in front of the tower, the depth of market, and if all fails, you can hit this button here. It's called Exit at Market and Cancel. And what that does is basically get you out of the market right away and cancels any outstanding orders you have. So you're in a position to take action if the black swan comes rolling around. Okay? So that is the first part of the disclaimer. Okay? It's meant to scare everyone, especially the new guys. My experience hanging out with CFRN over the years is that a lot of the guys that come there have been to this guy and this guru, and they've learned this and that along the way. So they're kind of numb by this because the market has given them, a few bruises here and there along the way. So they're kind of used to this. Okay. Let me send this guy an email real quick, so stand by. He needs the link to get in. So, they're kind of numb to it, all right? That's usually, let's see here. See if I can remember his email. Great. All right, hold on a second. This guy took me off my game here. How am I going to get this link to him? 1 second. Copy, paste, continue. Boy. All right, I think he's squared away. Okay. So the disclaimer is meant for those new guys, because the guys that come around to CFRN, they're pretty numb to the trading markets. They're looking for something new. They're missing something. They're not running on all cylinders, so they usually find it here at CFRN. Okay. The next slide is my relationship with CFRN. Okay. Daniels Trading versus CFRN. There is a line in between the two. Okay. A lot of guys get me into the CFRN camp a little bit because I'm there every morning. I'm in the background listening. I'm answering questions about platform and setups and, general things like that. Guys will reach out to me because maybe they can't get a hold of Dwayne, or they need help with this or that. They need help with the platform, or they may need help with the trade setup, or they have a question. Good thing is, if you call my phone number, I always pick up. Okay. And when Mike and Dwayne are tied up, usually people will call me because they know they just can get a hold of me. But the bottom line is this. CFRN started probably 10 years ago. I think I was introduced to them about 8 years ago. But anyways, it was just the radio program. And I met Dwayne, and Dwayne said, hey, come on the radio program. We're talking about markets. We can, share some opinions, ask questions, because our audience is always asking questions about the markets and, things of that nature. And so it kind of just started snowballing that way. And then what I noticed was that people kept hammering Dwayne about, teach us what you know, teach us what you know. And so his relationship with Michael kind of launched the CFRN mentoring program, basically. And so at that time, Michael and Dwayne are TradeStation developers, and our platform, which is the platform I support, DtPro, reads easy language. So they were able to code the CFRN indicators inside DtPro. The benefit of doing that was the platform's free. The data is only, $15 a month. And they have me answering phones because I can, I could support the platform. I know the trade setup. For every Thursday, I hang out for an hour and try to teach you guys and get you, tipping the scales your way to get you on the right track. So it kind of worked out. It was just kind of perfect timing. So that's how it started for the most part, just by chance. And so that's where our relationship started. And when it comes to, hey, I want to be a CFRN member, who do I pay? That relationship is between you and CFRN directly. If it's anything on their website, like the members area, the videos, the Thursday night workshops, anything related to Logic 247, the daily doubles, all that stuff, you would correspond directly with them. Okay. As far as the platform and the indicators inside DtPro, you're going to reach out to me. I do represent the brokerage part of it. The indicators are available on our platform, DtPro. They are available on Ninja. The biggest difference between Ninja and myself, one, if you need support, you're going to be passing emails back and forth to get things done. With me, you can talk to a live body. You just call the 866-928-3310 number, and I pick up. If we have to, we can do a one-on-one go-to-webinar, screen share, that kind of thing. If we really need to get you up and running, I do one-on-one mentoring. People send me their screenshots, their trades. Hey, critique some of the stuff that I've been doing. That's fair game. Okay, so there's a mutual benefit. Obviously, if you guys are doing well, I'm going to do well. So there is some motivation for me to spend an hour every Thursday getting you guys up to speed. All right, and getting you guys going. Okay, so at the desk here, we spoil you. So that's the bottom line. Okay, the Ninja rates are a little bit cheaper than ours, but it is what it is. Okay, that's how they get you in. But what they want is they want platform fees up front. So if you don't trade, they got paid. We didn't. So the takeaway is this. All right. CFRN is the educator. They have the trading tools. They're the software people. They coded everything inside the platform, DtPro. I support the platform. Therefore, there's a line in between. A big question I always get, okay, and it's a fair question. Does CFRN get any share in any of the commissions that you earn? The answer is no. They can't. They're not registered, but it's a valid question. They never asked. So I think that says a lot for them, is that they're trying to do everything above board. Their hands are on the table, so they're not, trying to do anything screwy or shady. They're doing the best they can to educate their guys. And so, that's how that relationship works. Okay. So I did knock out the disclaimers. Okay. The first and second one here. So now I'm going to move on, and that's to go over the trade setup. Okay. So for you guys that are brand new, okay, this is the big part. Okay. This is the traditional slingshot setup that's been around from day one. Okay. There's other trade setups that have kind of been created along the way. Not that one. These. They've been created along the way. Okay. This one's been around from day one. This is the one that Michael uses in the training room. This is the one I'm going to talk about because it's been around. Okay. So this is where we're going to start. And what you want to take from this is whatever we learn here, we're going to use this afternoon in the live markets. Okay, that's what we're going to do. Okay, so first order of business is the time frame. Okay, everything's going to be done on a 4-tick range chart. So if you have DtPro, how do you get there? Okay, let me shut down my live account here. Okay, and let me go to demo. Okay, let me be clear, I'm on a demo. Okay, so the first order of business is the time frame. You might be on a 5-minute, you might be on an hourly. Okay, the point is to get on the 4-tick range chart. So what you have to do here is in the upper left-hand corner, just hit the drop-down box and go down to custom and select range bar. Make that one look like a 4. Do nothing else but hit OK. Okay. That's what the chart should look like if you're looking at January crude right now on a 4-tick range. One of the biggest traps people fall into, they go to custom, they select tick bar. Okay. They turn that 2 into a 4 and it looks like a hot mess. Okay. If you're staring at something like this, you're wrong. Just go down to custom and select range bar 4 ticks. A lot smoother, and the benefit of the 4-tick range is that the height of each candle is going to be 4 ticks in height. Okay, so in the training room, you're going to hear Michael start rattling off highs and lows. Okay, he's doing that because he knows the height of each candle is going to be 4 ticks in height. Okay? So he can be proactive. So what proactive means is he'll be buying it or selling it or entering the market on stops. Okay? And the way he's going to do that is if the market is here at 52.02, he would end up buying it in the green because that's where we buy it when we want to go long, but right-clicking. Okay, you notice I buy stop. Okay, he's right-clicking above the market. So if the market takes off, all right, he's going with the momentum. All right, and the flip side of this, if we're at 51.95, what he'll end up doing, because he knows the height of each candle, 4 ticks in range, right? He will sell it on a stop. So that means he's right-clicking underneath the market. Okay, he's selling it or entering it, on a stop. Okay, he's going with the momentum of the market. Now this afternoon, if that applies, I'm going to point it out and show you exactly how to do that. Okay, but normally, if you're brand new, okay, what I would like you to do, just to keep it simple, is if we get a trade set up, I would like to have you guys left click. Okay, place limits. We get a long setup, we're going to left click in the green. Okay, that's how we buy it, and we make money as the market goes up. If we get a short signal, the signal to go short, we're going to left click in the red. Okay, red means sell, green means buy. Okay, same with kind of the candle colors too. Okay, so that's what we're going to end up doing. We're going to end up left clicking unless it applies, and then I'm going to show you how Michael does it. Okay, so the bottom line is, the short answer is, everything should be on a 4 tick range chart. That's where we start. Okay, so now the nuts and bolts of this thing. We're going to work on the top portion of the chart. Okay, so here's some buzzwords. The green line is referred to as the BBC. That's short for bullish bearish cross. Okay, this blue and red line is referred to as the MA1. Okay, together they make up step number 1. It's when the MA1 crosses the BBC, we will have a bearish cross or a bullish cross. A bearish cross or a bullish cross. Okay? If the MA1 is red, that's a bearish cross. If the MA1 is blue, well, that's a bullish cross. So the one that's highlighted here, that is a bearish cross because the MA1 is red. Okay? We're looking for selling opportunities. Looking for selling opportunities. Note I didn't say go short, go long, go short, go long. We're looking for selling opportunities. Okay? And the reason is, after this cross, what's normal for the market to do is to gravitate toward the BBC as it does here. That's what we're looking for the market to do. We're looking for the market to challenge this green line. Okay? It's normal for the market to do that. So not only looking for the market to attack this green line, but after it does, then we're looking for a close in the direction of the trend. Okay? Now we just said the trend was down because we have a bearish cross, and the color of the MA1 is red. Okay? So we should then be looking for a red candle or a down close. So what's going to end up happening is you're going to see a common denominator here. Ideally, you want everything to be either red or blue, or red or green. Red is bearish, green or blue is bullish. That's the optimal setup. That stacks all the probabilities in your favor. Okay? That is step number 2. After the cross, the market gravitates toward the BBC, challenges it, and closes in the direction of the trend. Okay? You're going to find out, if you're brand new, that sometimes the market has so much momentum, it can't get to the green line. It won't do the normal thing. So what you're going to learn, and what I'm going to labor on here this afternoon, is that you're going to get in the habit of drawing the trend lines. You're going to see Michael drawing the trend lines. You're going to see me draw trend lines. So you're going to have to get used to drawing trend lines. Okay? You're just going to have to get in the habit of doing that. Okay? So trend lines is important in this game. Okay? So we define steps 1 and 2. Okay? So when those are set in motion, then our eyes are going to gravitate toward the slingshot, okay, which is the oscillator portion of the chart. And basically, the trade exists down here in the slingshot, okay? So follow along here. Some more buzzwords. The red and blue line is the cycle, okay? The green line, well, it's very simple. It's just the green line. There's nothing special about it. But here's what's going on down there, okay? What the cycle is telling us in this picture is that the trend is down. Why is it down? Because guess what color it is? It is red. What color is MA1? It's red. What color was that down close? It was red. So everything is the same color. The trend is down on the 4-tick range chart. And this price action, this moving back to the normal position, which is back to the BBC, and the green line pulling away like it does, this space in between the cycle and the green line is referred to as divergence. Okay? Now it's been replaced. Divergence was commonly used. It confused some people, so now we're calling it separation. Okay? The trend is down, the green line is above the cycle, okay, and everything is the same color. When these 3 things, okay, and I just defined step number 3 in a roundabout way, okay, once those 3 things are in motion and the market is trending, so that means we're making lower lows or higher highs, depending on which direction we're going, there's really nothing else to do but to go inside the DOM and left click and get short. That's what that says, this chart here. Okay? There's nothing else to talk about other than to take action. Because here's what we expect to happen, and this is what I said earlier about the trade kind of exists down here in the slingshot, is that the cycle here is red. So what is it saying? The trend is down, right? Lower, lower, lower. This pull away is just an air pocket in this ongoing downtrend. So what we expect to happen is that ultimately the green line is going to come down into the cycle and close the gap. And the price action portion of this, the market is going to make a new pivot low. That's the normal thing. Okay? It's going to make a new pivot low. And when everything meets, when the green line pulls back to the cycle and they come together, it's at this point here, we're closing out the trade. That's what we're doing. And the reason is because we expect this green line to pull away again, and pull away again, pull away again, until, guess what, that cycle starts turning blue, right? So what's the trend telling us at this point? Trend is up. Trend is up. So now we expect the green line to start building underneath it and creating bullish separation or bullish divergence. And the idea then, sell that, sell that, sell that, and then as it turns, and as long as the market is trending, we're buying this and we're buying this. Okay? That's the game plan. So that's why I think the trade setup is down here below. The price action is giving us that, hey, additional clue or variable that has, you know what, maybe this is what's happening. And every trade has an 8-tick stop attached to it, no matter what. Okay, so I'm brand new. I trade the gold, or I trade the crude. The maximum loss is $80 per contract per trade if you're dead wrong. If I'm trading the soybeans or the ES, it's closer to $100. If I'm trading the mini Dow, well, it's only $40. Okay, it's all going to depend on the markets that you're trading, but the bottom line is no matter what instrument you're trading, you're always going to have an 8-tick stop attached to it. And by the way, there's some money management skills that go along with it. Okay, that means if the market goes 4 ticks in your favor, you move the stop to your entry. If it starts closing on the other side of the MA1, you're going to move the stop to your entry. You're going to learn to trail the stop. Okay, that was a mouthful. Okay, we went over a lot there. Okay, the bottom line is if you're brand new, this is day one, when you go into CFRN and you're going down that path, you're not learning to pick the top and you're not learning to pick the bottom. And you're certainly not learning to trade it from point A to point Z. What you're going to learn is take a piece out of the middle with the wind at your back. That is what you're learning. And along the way, you're going to move the stop, move the stop, move the stop, move the stop, until eventually you'll be stopped out or you just close the trade because the green cycle has ultimately come back into the cycle portion. Okay? That's what you're signing up for. You have tight stops, you have aggressive risk management, you're on a 4-tick range chart. So what does all that stuff mean? Probably a lot of trading. You're going to be in front of the screens. You have to be engaged in the market. The platform that you're using, you're going to have to get comfortable with. This DOM, this ladder, this tower here, you're going to have to get pretty good at it. Okay? There's some shortcuts in the DOM and in the tower here, okay? Then I'm going to show you. Shortcuts meaning once you enter the market, the platform will automatically place a stop loss for you, so you don't have to do any heavy lifting there. All you'll have to do is drag and drop, drag and drop, drag and drop, and just trail the stop. So that's a good shortcut to have. All right? So that's what you're signing up for. You're going to be scalping the markets, okay? So if that's something you want to do, all right, you got 5 days to check it out. You have a chance to download the platform. This is DtPro. I support it. If we have to sit down and do a one-on-one GoToWebinar, it would take me 15 minutes to put it all together for you. I got videos I created to download all this stuff. Okay? So that's it. That's the scoop. That is the setup. That is the traditional slingshot setup that's been around from day one. That is going to be the same setup we look for in the next 45 minutes. Okay? So let's do it. First order of business. This is the first question you ask yourself. Write it down. Are we trending? You don't push any buttons until we define whether we're trending or not. So what I want you to do, and it's time for me to shut this email down. First order of business is get in the habit of zooming out. See this little red magnifying glass? Bruce, you're going to get used to this button here, zoom out. Maybe click it 1 or 2 times just to get a larger view of what's going on. Okay? We have, earlier here we were consolidating in the crude. Would you agree? Back and forth. Well, we just broke out of that range, right? This little box. So that tells me right now the crude is trending. And so now we can look for buying opportunities in the crude. All right? So, first question we ask ourselves, are we trending? Yes. Do we have a bullish cross? The MA1 is blue and crossing the green line. Yes. Okay? The normal thing for the market to do is to do what? Pull back to this green line. Okay? That's normal. So what we need to do as soon as you get the cross, here it is, start drawing trend lines. You better activate the trend line and start drawing. So here we go. That's how that trend line should be drawn. Okay? The reason why we do this is number one, 2 things. Number one, we don't know if it'll do the normal thing and get back here. If it has so much bullish momentum, it'll maybe pull back a little bit and then take off. But number two, if that cycle turns a different color, which is not necessarily what we want to see. We like everything to be the same color because that stacks the probabilities in our favor. But if this midstream starts turning a different color on us, that trend line is required. And a close above that trend line is required before we can activate any kind of long position here. Okay? So the close of this candle here lights to match to the long side. Okay? That's what that does right there, that candle. All right? That's why we draw the trend line. We get in a position to take action if this happens. All right. Now I'm going to throw you a curveball right off the bat because it started happening on the first chart we started looking at. Disqualifier. As I said earlier, we want everything to be the same color. That stacks the probabilities in our favor, right? That's good for the home team. But when this starts turning a different color on us, like I said, it waters down the probability. Furthermore, if it starts curling down at a 45-degree angle, like it is doing a little bit right now, that disqualifies the trade. Disqualifying meaning we don't take the trade, we don't push any buttons, we stand at parade rest, we do nothing. Okay? If you get to this point and this turns red and it's got a tilt to it, and if you're not sure if it's 45-degree angles, maybe you're thinking, man, it looks more like a 20 or a 15 or a 10 or a 30. When in doubt, just stay out. Period. It's got to be easy and it's got to be obvious before you push any buttons. Remember, you're on a 4-tick range chart. Okay, there's going to be plenty of opportunities throughout the day. If you're not sure, don't push any buttons. Okay? If it takes off like it does, it's just going to reinforce the fact that, hey, you know what? I identified what was going on. I drew the trend line right. It took off. All right? I was right. The signal worked. All right? So that's kind of the process I want you guys to take, okay, when evaluating the markets. Okay? First question, are we trending? All right? That's the first question. Once you say yes to that, do we have a bullish or bearish cross? Once you say yes to that, activate the trend line. Okay? That's what we do. We activate the trend line because we got to constantly draw trend lines. Okay? All right. Let's skip over the crude. It's about 1:30. Crude is closing. Usually around 1:30, okay, we get some craziness in the crude market because it's closing. We got fun buying and selling toward the close there. So I'm going to switch guns on you and go to the crazy S&P that's been all over the place. All over the place. All over the place on an hourly. But we're on a 4-tick range chart. All right. First question we ask ourselves, are we trending? Does this look like a market that's trending? Get in the habit of doing what? Hitting that zoom out button. If you have DtPro, it's the red magnifying glass. To me, this is a market that is not trending. I got a low here, a low here, a low here. But Bert, we made a little lower low here. Nah, not quite. We want to spend some time underneath there. Not only that, if you're not sure about trending or not, take a look at dynamic support and resistance. You see how they're side by side? Okay, that's a first clue. We're sideways. Okay, there's better opportunities to be looking for. Okay, this is some sideways action. Okay, what's cool about the action, okay, we do have the bearish cross here, right? That MA1 is red, and it's crossing the BBC. And we did have some bearish divergence. Okay, the bearish separation, that cycle was red. We did the normal thing. We pulled back to the BBC, but this is one good reason why you wait for a close in the direction of the trend. Okay? Okay? Where's the close in the direction of the trend? We haven't seen it. Okay? So when you look at this picture, here's a question I always get. Why don't you just put an order right there and sell it? Because look what happened after that. Okay? This is a good reason why you don't. You're substituting price for action, okay? Because you're eliminating this from happening. The market ripping out of the hole and just stopping you out right away, okay? By the way, the fact that this black step line has pierced the BBC there disqualifies any trade. That is the second disqualifier, okay? So we kind of define two so far that kind of hit us in the face, almost three. But there's basically three disqualifiers. And number one, the big one is, if we're not trending, that's a big fat disqualifier. If we're trading sideways, you're not doing anything. Number two, this black step line, okay, piercing the BBC as it did here. Okay, if we break the BBC like we did without any down closes, this was the first down close. Okay, once these two happen here, you take that off the table. You're standing at parade rest again. And the third one was the one I kind of talked about in the crude a little bit. Okay, which was, you have to be careful. It's happening right now, which is perfect timing for this. Okay. This. When the market is doing the normal thing, it's trying to pull back to the BBC. That's normal. That's what we expect to happen. As I said earlier, we want everything to be the same color. If we're looking to go long, we want blue. But as it turns red, we said, waters down the probability. But the biggest fat disqualifier is this. Is this thing starts curling over at a 45-degree angle in the opposite direction of the trend, which is happening right here, right now, that's the other disqualifier. What it's suggesting is that crude will eventually come down and we'll have a cycle reset. Okay, that's what it suggests. And now you're saying, but Bert, it's going higher. It doesn't matter. A lot of times it will not do that. It will go down against you, or it will give you grief on the trade. That means trade sideways, back and forth, up and down, up and down, up and down. Okay? And keep you guessing. And when you're guessing, 9 times out of 10, you're going to make the wrong move. And that move is going to be hit the exit button, because you can't stand it watching the market go back and forth. All right? I've done it, and I've seen people do it. Now let me tell Paul I'm going to call him back. 1 second. Call back, Paul. Call back. Paul's been with me for about 20 years, maybe 15, 20 years. He got in a car accident, or actually a ATV accident, so he can barely speak. He doesn't trade, but he's been calling me every day for quotes. That's all he can do. So I give him quotes every single day, probably 3 or 4 times a day. I do it because I think it helps him. This thing helps him. I think if he didn't have that, I'm not sure what would happen to Paul. So that's the Paul story. All right, so going back to the S&P. So again, sideways action, easy and obvious, right? Dynamic support and resistance side by side. All right, let's go find something that might be trending. I'm going to go to gold. Same thing. Paul Child. I think he's from Pennsylvania, actually. Anyways, it's just an old client of mine I've had forever, and he got in an accident, and I think he's paralyzed or can't speak. No one can understand him but me, because I've talked to him for the last 20 years, and I can tell what he's asking for. So gold is trading sideways. Okay, easy and obvious, right? When we're not sure, lean on the dynamic support and resistance side by side. Okay, we got a little bit of a box going on here. All right, it's sideways. Okay, so stay out of the mess. Okay, look for a better opportunity. All right, I'm going to switch guns on you again. So here we go. We're going to go to the euro currency. First question we ask ourselves, are we trending? Okay. I like the fact here's what I like. A few things. We were trading sideways here, right? Can you see that? Let me blow it up a little bit. Okay. We were trading sideways here. Finally, we blasted out of there, right? And we got higher than this left over here. So that tells me we were trending. Okay. So we were looking for buying opportunities. I would take them all day. All right. Now we have a bearish cross. All right. And we have a bearish cross. We have bearish separation. The line is red. That's good for the home team if we're looking for shorts. And the green line is up above. So why aren't we taking any shorts right here? Well, the trend's up. Okay, we're kind of fighting the trend, and we got a little bit of support here where resistance was. So I'm not very excited about being short at this moment. Okay, so that's the reason for that. All right. Let's throw a British pound up there. Same thing. Okay. Again, I want you guys to get in the habit. A lot of times you guys get hypnotized by looking at Mike's charts. Okay. They're nice and big. Okay. And you see what's in front of you, which is good. That's fine. But if you're going to look for markets that are trending, you really need to zoom out. Okay. I don't know how many times I could tell you this, but you need to get in the habit of doing that. Zoom out. Okay. I'm not asking you to go an hourly 5:30. I'm not asking you to do that. Just zoom out. Let's look a little left. Okay. Because look, prime example. This one is the one that worked out. We had a pullback to the BBC. The cycle was blue. Bullish separation. Where did that really go, right? Did everything you would expect it to do. But you know what? Was that just luck? Because if you tighten things up, we were bumping our head against resistance here a few times. Okay? That's one I would have missed. Okay? But, you really got to look at that a little closer. David, I'm still in the webinar. Let me call you back, bud. Thank you. That was David Goldman from Lafayette, Indiana. So for the moment, we did the normal thing. The market has pulled back to the BBC, and we have an up close, right? The color of the cycle has turned on us, right? It has turned red. So what does that mean to us? That means we have to draw a trend line. The trend line started off like this, by the way. This is going to happen, and you guys are going to have to get used to this. Okay? Now, the trend line looked like this. Now, the trend line looks like that. Okay? It started off like this, then this, now it looks like that. So the bottom line is this. We did the normal thing. The market pulled back to the BBC. Okay? This turned color on us. That's a warning flag to us. Probabilities are being watered down. What I warned you about was this thing about curling over. Okay? Fighting the trend a little bit. Okay? So number one, it's really going to have to close above the trend line before we can even activate a long. Okay? Well, the good thing is it'd be above the MA1. Now, returning CFRN members, guys that are used to it, are going to tell you, well, that's a momentum trade, and there's some certain rules with that I'm not going to get into. All right? But this is a question mark, right? A question mark is something we're not going to take action on. We're going to look for a better opportunity. So let's move on to another chart. Okay? When in doubt, stay out. Make sense? Go back to crude. You know what? Let's go to natural gas. I forgot about that. I always go to natural gas on Thursdays because there's an AGA report. AGA report is a supply number for natural gas. I know the natural gas has been really flying all around. All right. The weather is perfect for it. Okay, so we get some weather scares back and forth. We get some supply numbers on Thursday, so I know we're going to get some volatility. Okay. So that's why I gravitate toward it. And I'm familiar with the personality of it. That's another thing you'll have to get used to. But the first question we ask ourselves again, are we trending? This one's real easy. Okay, I even zoomed out. This one is just, it's going down. Okay, so that's an easy and obvious one. So now we're just looking for the market to pull back. That's what we're looking for the market to do. Pull back and do the normal thing, which is get to the green line or the BBC. Okay, at least make an attempt. An attempt might be something as small as that. That's why we draw the trend line. Or something as small as that. Okay. Notice the theme here. I'm using 2 candles to draw a trend line or connect the dots. Okay, that should be your mindset. Okay, 2 candles to draw a trend line. Okay. Again, to activate the trend line, DtPro guys, just left click right here. When you put your mouse over this, it says line. Notice you have a pair of crosshairs. Okay. I'm going to make one observation off the bat here, and I think this is important. Okay. Check this out. The bearish cross started way back here at about 1 o'clock. Well, that's a long time on a 4-tick range chart. It started back here. Okay. Just an observation, just from experience being in front of these indicators for about 8 years. Okay. The trade started back here. We're way over here. At some point, this market is going to correct. We're going to have a cycle reset. It tried it here. Okay. My gut feeling is it's going to happen sooner than later. Is that an excuse to pick a bottom? No. What I'm saying is, after the cross, usually the first, the second, maybe the third are your best opportunities. Definitely the first and the second one. Okay? You start going down the hill. After that, you are now asking for trouble from that point on. Okay? I'm saying that because at some point you're going to get the cycle reset. And what does that mean? That means the red line starts turning blue, and guess what it starts doing? Curling up. And as that curls up, the market's going to curl up, and it will break the BBC. Okay? So the observation is you'll be put in this situation. Okay? And you're going to say, man, this thing just keeps going down and down. This is great. At some point, you're going to have the cycle reset. Put it under your cap. You may not think about it after a while, but you'll remember this when this happens to you. Okay? You're going to remember, Bert said that first or second attempt is probably the best opportunities, but when you go 5, 6, 7, you're just asking for trouble. Just something to consider. Okay? Indices. Chop fest. Okay? Big chop fest. Nobody should be doing business here. Okay? The other trade setups, this other stuff, might apply here when we're trading sideways. But the slingshot setup, this is a mess right now. The mini Dow. Okay? Same thing. It's kind of stuck in a range here too. Let me throw you another curveball. Okay? That I know the Nasdaq's very popular, and the mini Dow is very popular right now. But those two markets are really zipping around. And boy, do you have to be really good on the DOM to take advantage of it. What some guys are doing is that they're taking that 4-tick range and making it an 8-tick range chart. Okay? The principle is still the same. The trade setup is still the same. The only change is if you're using an 8-tick range chart, then your stop is 16 ticks. Okay, let me repeat. Okay, if you change the time frame from a 4-tick range to an 8-tick range chart, then your new stop loss is 16 ticks. You're just going to double it up. Okay. I'm looking at the YM on an 8-tick range. We wouldn't push any buttons anyways. We're trading sideways. It doesn't even matter if you're on a 4-tick range or an 8-tick range. It's still pretty messy here. The good thing maybe about an 8-tick range that you might get some runners, some bigger runners, but you're, again, assuming more risk for that, right? So you have to, you kind of have to outweigh, that's up to you. Someone's asking, can you use these on larger time frames? Yes. If you like larger time frames, go to an hourly chart. Okay? The real good one? Check this out, guys. Crude oil, January on a weekly. Bullish cross. November 17. What's the normal thing for the market to do? Pull back to the BBC. Normal thing for the market to do? Pull back to the BBC. Pull back to the BBC. Pull back to the BBC. Okay? Bullish separation. Bullish separation. Uh-oh. Has that 45-degree angle on a weekly scale? Holy smokes. Okay. What is it saying now? What's the first thing that sticks out? Bearish cross. What also sticks out? Dynamic support on a weekly basis. If $50 holds in crude, guess where would you think the market's going to go to? What's the normal thing for the market to do? Pull back to the BBC, right? So if someone were to call me up today and say, what do you think about crude? Well, number one, I would say as long as we hold $50, I would expect crude to go higher. Where would you think it's going, Bert? Maybe 61.35. As time goes on, this green line is going to come down too, right? So your targets will change, okay? So the question is, can you use these indicators on larger time frames? Absolutely. This is a weekly scale. That's hard to trade. All right. It's easy for me to stand up and say, look after the fact. But man, that is hard to trade on a weekly scale. Okay. Anyways, that answered the question, and I'll hopefully. And I think a lot of the Logic 247 stuff that Dwayne's doing here. Okay. Logic 247. That's based on 5-minute and 30-minute charts, along with the weekly trading zones that you're going to get. All right. So those are combined. So he's learning, using those larger time frames, but a lot of those principles come from this basic setup. All right. These 4 things, for the most part, or these 3 things. All right. So let's get my head back on straight. Let's look for something that's moving in a direction. Crude is this is gold, sideways. Let's go to crude. Okay, double top here. Not surprising. Remember I said, hey, back here, this is not what I told you so, but here's the point. Remember we were talking about right here? And I said, hey, you better be careful. This is telling us something. And the market went up, and you're like, well, it's going up, Bert. Well, look at what's happening. Ultimately, it is going down. Okay, so it will, talking about this being a direction, ultimately, it'll start taking course of the cycle. Okay, let me go to natural gas. Here's what I was talking about again. What did we just talk about earlier? The observation was, man, that bearish cross happened way the heck back here, and at some point, I wouldn't be surprised we have a cycle reset. Well, there it is. cycle reset. The market gets so oversold, basically, that the market's going to have to adjust itself. Again, that's an observation. Keep under your cap as you get, as you kind of progress. Okay? Something to think about. Bottom line, and there's nothing to do right now in the natural gas. We did have a bullish cross here. We did have a pullback to the BBC, right? We have bullish separation, but we're fighting the trend a little bit, and we have dynamic resistance. So right now, don't touch it. Okay? We want markets to be making some higher highs or lower lows. All right, so we covered crude, natural gas. We covered gold because gold is a hot mess. Indices were stuck in a range, so I'm going to go back to the currencies. This is the Canadian dollar. Okay. We had a bearish cross here. The MA1 is red, piercing the BBC. That's a bearish signal. We're looking for the market to go down. We're looking for the market to do the normal thing. What is that? Pull back to the BBC. It does it there. Not only that, it also closes in the direction of the trend. The trend is down. Why? Because the MA1 is red. The candle should be red. Okay? So, our eyes gravitate toward the slingshot. Is the cycle red? That's good for the home team. And do we have separation? We do. Okay? So what are you waiting for? So you would left click right here in the red and initiate a short. Now I'm going to caution you one thing. Okay? But I did this because I wanted to teach you something on the DOM. As I told you earlier, you can set a bracket. Okay? A bracket is you can have the DOM automatically place a stop loss for you as soon as you enter the market, like I just did. I went short here at 74.87.5. It's right here. Also, it tells you here. It also tells you nice colored little red line on the chart, and your P&L's moving. So there's probably 3 or 4 spots that let you know I'm short the market right now. Okay? My stop loss is right here. That's the stop loss. It's 8 ticks away. Now, in order to activate that, what you do is you left click on this Tinker Toy triangle. That's what I call it. Okay, when you do that, the bottom of the DOM opens up. See how I close it? I open it, the bottom of the DOM opens up. Just select sell stop. Just select the box next to buy stop. Okay, those 2 things. Right click over the word buy stop, factor in ticks, make sure that's an 8. Right click over the word sell stop, factor in ticks, make sure that is 8. What that is telling you, as soon as you get into the market, your stop will go 1, 2, 3, 4, 5, 6, 7, 8 ticks away. In the Canadian dollar, if we're dead wrong, we're going to lose $80. That's what that means. All right. Now, the money management rules are as follows. If the market moves 4 ticks in our favor, 1, 2, 3, 4, we will go to the stop loss right here. Left click over that 1, drag it down, and release it. Okay? Drag it, release. That's how you trail your stop. Okay? That's what you do. All right? So if the market goes 4 ticks in your favor or closes on the other side of the MA1, the MA1 is this red line, okay? Then you also move the stop down to break even, whichever happens first. Okay, sometimes it's one and the same. All right, so that's how you push buttons on the DOM. We left click in the red, and we want prices to go down. Okay, we make money as the market goes down. All right, now, good question, just popped up. What about the green dynamic support dots? Is that an issue right now? Does that disqualify any trades? It does not. In this case, if it's a normal thing where the market pulls back to the BBC and closes in the direction of the trend, dynamic support printing, it's okay. Okay? It's still fine. The trade is still active. Okay? If it were a momentum trade, again, I'm not going to go into the details of it, but if it was a momentum trade where the trade is basically activated on the other side of this MA1, then it would not be a good trade. It would disqualify that. But for our purposes, this is a valid trade setup in the context of the green dots. All right. Any questions about the DOM and how to set up the bracket? Okay. Left click the boxes. Make sure that's set to 8 ticks. The stops will be automatically placed as soon as you enter the market, and all you have to do is drag and drop, drag and drop, drag and drop to move the stop down. That's all Michael's doing. Okay? About the trade setup. Now, all the variables are there. It's missing one piece in my opinion. I think we're trading sideways here. Okay? I think there's better opportunities out there. Okay? But I think the fact that we've been congesting here, we got some tops here. We had a bottom here and we gradually broke it. It doesn't surprise me that we're gravitating back toward the BBC. Okay? This is sideways. That would be my opinion. So I would not take this at all, and I wouldn't ask you to do that. All right? So that's my observation there with this one. Okay? It has everything. Okay? I'm not sure if it's really trending. If that's something we really want to take action on. I just think there's better opportunities. And when we have doubt, we stay out, right? That's our motto. Okay? It's got to be easy and obvious. Okay? So I'm in this trade. Holy smokes. I'm not sure about it. I want to get out. I need to go to the bathroom, whatever. I don't want to babysit it. The quickest way to get out of a market, see this hot button here, exit at market and cancel. Left click on it. You're out of it at the market, and it also cancels any orders you have working. Here's another habit you guys should also getting used to doing. See this working orders tab here? Everybody's workspace and layout is different. Okay? Count summary, working orders, okay? Completed orders. All this stuff means nothing. This tab does. Okay? And why it's important is this. If you get out of a trade and you think you're flat, in other words, you don't have a long position or you don't have a short position, this box should be empty. As soon as you place an order, see how it occupies, all right, space in there. When you hit cancel all, disappears. Before you before you get out of a trade, when you think you're out, check this box. It should always be open. It should be blank. Okay. Before you shut the platform off, it'll remind you, hey, you got a working order. But I would check this tab just to make sure you have no loose ends. And the position tab, it should be grayed out. Okay. If you have a position on, it'll tell you. It'll be bright and red if it's short. Okay. It'll be green or blue. Okay. And notice how I have a stop in. Okay. So watch this. Position. It's red. I know I'm short because it's on the chart. It's in the middle of the DOM. It's right here. My P&L is moving. It also says it's right here. I mean, it just hits you right in the face. When I get rid of it, it's grayed out. Okay, so that should make you feel comfortable. And now the working orders is blank. Okay, it's worth the extra time to go check those two boxes, because a big thing that I see happening to people is they think they're out of the market. They don't have a position. And guess what? They do. and it usually costs some money. It never works out to the positive. Okay. Back to the ES. Oh, look at this. I wonder who that is. We were trading sideways forever here, right? And we finally broke out. So now we started the trend to the upside. Okay. So look, here was the box. And now we broke out of the box. So now it's game on to the upside. Okay. The good thing is, in the last hour, what we did talk about is a cycle, right? Look at how curled over that is. Okay. Better setup here. Okay. It watered it down a little bit, but we did go up. Now that's a little bit crazy right there. Okay. I'm not sure about taking any longs with the face of that. All right. So it's 2 o'clock. All right. I see a lot of things that are just kind of trading sideways. The S&P kind of broke out a little bit, but I don't see anything really urgent. Are there any questions? I went over a lot, but I think there's a lot of takeaways from today's webinar, okay? The trade setup, if you're brand new, this is it right here, okay? There are really 3 or 4 simple rules, okay? And now you're creating habits, okay? The habits are you go through the motions. Are we trending? Okay, number 1. Number 2, once you say yes to that, do we have a bullish or bearish cross? Once you say yes to that, you activate the trend line. You're looking for the market to do the normal thing. The normal thing is pull back to the BBC. In the process, you are drawing trend lines. You're drawing trend lines. Why? Because A, we don't know if it'll get to the BBC, and B, if the cycle turns color on us, it requires the trend line. Okay? So you're just going through a progression. Boom, 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 boom. Okay? I'm going to take one more look. Crude, it's not going to offer us anything. We'll stand by natural gas. Nothing going on there. Euro. Nothing going on there. So the markets are pretty flat here going in. We got about an hour left. Okay? All right, so I recorded this. All right, there was a lot of good stuff we talked about. Okay? I have to, I forget what I have to do, code it, or I have to do something. I have to push a button and it does something. But the bottom line is I'll get it out to YouTube so you guys can review this if you want. Okay, like I said, if you're brand new, this is a great syllabus. If you are a CFRN member, there's a lot of topics I talked about, a lot of traps that people fall into if they're having problems or they're spinning their wheels. Okay, the biggest ones are it's not trending, the cycle's turning color on them, they're usually over trading, a lot of the stuff that you read in the books that ends up happening. All right, so I'm going to shut it down. Every Thursday for an hour from 1 to 2, I'm like a broken record over and over and over and over again. Okay? That's it. Just trying to create good habits, and then you take those habits, to the platform, and you go right through the, like I said, the steps. And then hopefully that, tips the scales in your favor, and we go from there. So that's a scoop. If you have questions, you can call or email me. And then if we have to do a one-on-one go-to-webinar to get the platform up or the indicators running, or if you want to chat about setups or questions about the setups, you guys, I'm the guy that picks up the phone. So that's the deal. Okay. All right. See you in the morning. I'll be in the background. That setup is called the traditional slingshot setup. Okay. That means the market gravitates toward the BBC. It touches the BBC. Okay. Right here. After the cross, it pulls back to the BBC and closes in the direction of the trend. Our eyes are then focused on the slingshot because then we're looking for bearish divergence. And Neil, the cycle you want to be the same color as everything else, because this is telling us, again, the trend is down. Okay? And it's nice because it's got a nice slope to it. That's even better. Okay? And the green line pulling away combined with this action here is that extra little clue that might be suggesting, you know what, that was just an air pocket in this ongoing downtrend. All right, get short on the close of this candle. All right, because what we expect to happen, all we can do is forecast the normal, and that is the green line to come down and eventually touch the cycle and close the gap. And the market is going to make a new pivot low. And this is the point we get out, because we expect the green line to do this and do this and do this until, guess what, that cycle turns blue and our trend turns bearish, and now we're looking for the green line to get underneath it. Okay? All right, that's it. Shutting it down. We will talk next Thursday, or I'll see you in the room.